Good morning, everybody. This is Mike Wade. Brandon Burke is on assignment. I've always wanted to say that. He's out in New York today, so it's just you, me, and Ryan in the background. How you doing today, Ryan?
Doing pretty good. How about yourself?
I'm doing good, man. There's so much happening right now. There's so much breaking news. And today what we're going to do is take a look at the markets and this breaking news. We're going to take a look at last week's trade on Mobileye. It's doing really well. It's not quite done yet. It's not quite cooked yet, but it's almost there. We're also going to give away my sniper guidebook for free. That's coming up as well. And then I have a really cool live trade today based on Bitcoin. Yes, Bitcoin is in the news. We'll look at that as well. And then at the end, Ryan and I are going to take a look at some of your stocks. So if you have any stocks of interest, please put them in the chat box right where you have your right in the YouTube area there, and just start typing those in, and we'll have some time at the end of the show here to take a look at the stocks that you're looking at. Also, this is the Hub channel on YouTube, and if you like what you see, please feel free to subscribe, and then you'll be connected with all the great content that Hub provides here right on YouTube. So let's get going. I want to go right into the news. On the top of the docket today is consumer prices rose 0.3% in December, higher than expected. Now, I'm going to go right to a chart of the S&P 500. Okay, so let's talk a little bit about what this CPI is. The CPI is a consumer price index report, and in layman's terms, it measures how expensive stuff is for us as consumers, at least in the United States. And so, we've had a high interest rate. We're in a high interest rate environment based on all of the interest rate hikes last year. In the December Fed meeting, the Fed flagged that, hey, maybe we're going to be ready to start dropping rates later in the year. But the Fed is not going to drop rates while inflation is at a peak. And inflation, the CPI revealed that inflation has ticked up a little bit from last month. That's not what the Fed wants to see. The Fed wants to see the other direction, the CPI dropping, and that's not what happened. And so let me show you something that's kind of cool here. First off, the chart of the SPY, 480 right here on the SPYs is all-time highs. So the SPYs are reaching for all-time highs. Now, this is yesterday's data, and I'm going to use the Hub charting software, and I'm going to give you a 15-minute bar. And so I want to show you what was up. This morning, I get up at 5 in the morning and I meditate and I look at the markets and I'm like, man, I can't believe I get to do this for my living. I get to trade. It's just amazing. And so right here, you can see this, what color is that? Gray. This gray area is post-market and the light blue area is pre-market. All right, so what happened in pre-market was the futures were up. Futures up, and then the CPI report came out and the futures came down quite hard, actually, and now they're bouncing a bit. So if you want to take a quick look and see how the futures are, you can go to many websites. CNBC is one of them, and here on the CNBC website, you get an idea of the futures. All right, so the Dow futures are down a tick. S&P 500 down a bit, NASDAQ down pretty much flat, oil's up because of the pirates. We talked about that last week, Ryan. The pirates have kicked it up a notch in the Red Sea, and that conflict is keeping oil tankers from pulling oil out of that area of the world, and oil prices are up consequently. That could be a really good play. That would be a really good place to look for sniper candidates. We're not going to do that today, because we have some really cool stuff that has also come up in the news, and I'll come back to that in a minute. So here's where we are on the where's my? All right. So anyway, the S&P 500. That's what I need. I lost the button there. There it is, Mikey. Come on, wake up, buddy. All right. So the futures are pretty much flat. I think where we're going from here is up. The market is shaken off the higher than expected inflationary data, and the trend is certainly right at resistance. We break this level here, which is 477 on the SPYs, and then I think 480 is in the cards. I like that. The reason I'm more confident about that is that the market has shaken off and given up on its expectations of a rate hike anytime soon. And yet the markets have not responded negatively, really, a little bit. So I think the bullish trend is probably going to stay intact. If I want to give an even more basic prognosis, I'd say that expect the SPYs to stay between 470 and 480. I'm using support here, support, resistance, support, support, support. So that 470 level should hold. If it doesn't, then expect a bearish move. And then if it hits 480, there'll be resistance there. If we break 480, we're off to the races. All right, so that's some interesting news that you know, as a sniper trader, I'm opportunistic. I'm looking for really good news or really bad news. And market direction, although important, isn't as critical as these blue herring news events that can really help us out quite a bit with our probability. Now, the next news item that I'm really excited about is the SEC just approved spot ETFs on cryptocurrency. What does that mean? A spot ETF actually pegs itself exactly to the price of Bitcoin. Now, we do have ETFs out there right now. BITO is one of them, and we're going to do something with BITO today. We're going to do a trade on BITO today. So the SEC has now approved and legitimized cryptocurrency by approving spot ETFs. So now companies like BlackRock, Cathie Wood from ARK Investments, Fidelity, they're all in the throes of creating these Bitcoin, Ethereum, cryptocurrency spot ETFs. It legitimizes cryptocurrency to a larger degree, and that should prop up and you know, increase this bullish trend we've had in cryptocurrency. So BITO is one that actually trades futures on cryptocurrency, and it tracks pretty well, like 90+% accuracy. It tracks very well Bitcoin. So this is the one we have today that we can trade today. It's not a spot ETF, but it's an ETF that moves in lockstep with cryptocurrency, maybe not 100%, but very close to 100%. So this is what Bitcoin has done in the last several months here. Bitcoin has made a solid run up. It's hit, BITO is at 23, which tracks all-time high territory on, not all-time high, but recent high territory on Bitcoin. So we got some resistance there. And we can also take a look pre-market to see what BITO is, where BITO is going to open. And so here you can see we're going to open higher. We're going to be above these prior peaks. So BITO is on the rise, and it's a perfect candidate for a sniper. Now, we do have a manual that you can get. It's free. You can download it by clicking the link below this video. It's a guide I put together. There's a lot of moving parts to this sniper approach. It's super duper high probability. We generally have 90% wins. That's over the last year and a half when I've been publishing these trades. About a year and a half track record of 90% wins. What? 90% wins? Yeah, for real. And an average profit of about 10% every 8 days. 10% doesn't sound like very much, but if you do 10% every 8 days, that's 30% a month on the same money. You know, the numbers get just crazy. So that is the system. There's a free manual. Go ahead and download it. Every week at this time on Thursdays, we do live sniper trades. We got one for today, and we had one from last week. Let's take a look at last week's trade on Mobileye. I never heard of Mobileye. I hadn't either. I don't care. Mobileye makes car guidance systems for the likes of Tesla and companies like that. And let me show you the stock chart when we got in. And so Mobileye tanked on bad news. We do have that graphic, Brian. We do have that graphic on Mobileye. So it plunged 28%, even before the market opened, when the company came out and said, our earnings are going to be really bad when earnings comes. So earnings hadn't even been announced, and they said even before earnings, they're going to be bad, everybody. And the stock plummeted. Now that news is so important. It's like an anchor around the company. Who's going to buy Mobileye into earnings when they said their earnings are going to be terrible? Well, some people did. We got a bit of a bounce, but we placed a line in the sand at 34. The stock opened here. This was last Thursday. This is what's happened since last Thursday. The stock opened here, and then made a bit of a bullish run. The bullish ran up, hit 32.50 resistance, and then has failed. So all we need to have happen for us to nab a profit on this trade is for the stock to stay below 34. Go all the way down to 0, go sideways, or even go up to 34. Don't go above 34. Why might it not? Well, 34 is resistance. It was support. Now that's resistance. It's going to have to take an act of God or a big buyer or a big piece of news or an analyst to say this stock's got it going on before this 34 level will be breached. Is that possible? Yeah, it is. We lose 1 out of 10 of these, so that could happen, always. So let me show you the risk graph on this one. So I use tools from a guy named Tom Gentile, who I've been working with for what, 22 years or 23 years. He's a good friend of mine, and I use his software. It's really good software. It allows me to see the complexion of the trade visually. So here's a risk graph, and yeah, a little bit of profit. You know, we sold the 34 call. We bought the 35 call above to protect. We got 10 cents credit. We have 90 cents of risk. We did it 5 times, 450 of max risk to make 50. Again, that doesn't sound like a lot, but when you start to add it up over time, it's like Moneyball, the movie Moneyball. Just get on base. Just get on base. You don't even have to get a home run. Just get on base, get on base, get on base, and the runs start happening. So we could make about 11% on this. We're going to take it off for 2 cents or 1 cent, And, you know, we've got 9 days left, and it just doesn't look like this stock is going to get back up to 34. And by expiration on Jan 19th, which is a week from Friday, we should very well have another winner on this one. Now, the markets are about to open, and so guess what time it is, Ryan? It's time to go after a trade. And the trade that I want to do, I'm going to jump on this wagon. The SEC has approved spot ETFs. Bitcoin should rise from here. BITO is going to open up here around 23. All right, so the markets are going to open. Now listen, if you can place these sniper trades anytime during the day. It's better though to place the trade right at the market open, which is in 1 minute, because at the open, especially with news like this, traders are going to come in droves to sell and buy options on BITO. So what we're going to do here is draw a line in the sand at 20. Why 20? Well, 20 is support. Right there, support. We've got the 50-day average as well, providing another level of support. We have support at 21. We have support at 22. We have support at 23 now. So what does that mean? It means the stock is going to have to break down below 23 support, down below 22 support, down below, am I counting correctly? Down below 21 support, down below 20, down below the 50-day average before we'll lose money on this trade. What's that, 5, 6 support levels? So that there's an added layer of protection. So here's the probability. We have the news. Bitcoin should rise from here. Bitcoin has been further legitimized by the SEC. All right, so that's going to enthuse investors to come in and go after Bitcoin. Okay, so we have that. We have technically the stock's gapped up above 23, which is now support. We have other support levels to keep us safe in the event BITO does decide to take a dip. In fact, it's coming down a little bit as I speak. That's good for us. So we're going to sell, in other words, a 20 put spread on BITO. All right, so now what I'm going to do is go into Thinkorswim. What's Thinkorswim? It's a broker platform. I'm in a simulated trading account. Okay, what does that mean? It means that the data here is simulated. It's live data, but the act of taking a trade is simulated. All right, so I'm using a broker platform in order to show you exactly how to place these trades. January 26th. So I've got the stock symbol there is BITO. These are all the available expirations that I have at my disposal. Typically, we want to go after 14 days of time. So if you look down here, 15 days of time, the 26th of January is the 15-day option. That's the closest to 14 days that I can get. So I'm going to select that option chain. And now I've got this set up. Let me make it a little more basic for you. All right, so these are the strike prices and expiration dates. Okay, so what I want to do, and the puts are on the right, the calls are on the left. So what I want to do here is sell the 20 put. That 20 put is my line in the sand. All right, I also then want to buy the 1950 put. So to sell the 20 put in this particular platform, I click on the bid price, and that creates a sell order underneath for that leg. And then I control click the 1950 ask price, and that gets me, now I'm not seeing any credit there just yet. So we're going to have to wait a little bit probably. Let me play around with this, this option chain here and see. The slippage is a little wide right now, but we're going to try to get this 20, and I'm going to put an order in here to sell it for 10 cents. Yeah, it's crazy, right? It's like a feeding frenzy right now. Market makers are trying to figure out the pricing. So we may not get anything at 20. I'm going to try, though. I'm going to try to get something. Let's go ahead and take a look at the number of contracts we want to do. All right, so I have a little nifty spreadsheet to help me out. Now, in the guide are these calculations. All right. You want to take the width of the spread. What's that? It's the distance between the strikes. So if I sell the 20 put, buy the 1950 put, that's 50 cents between strikes. All right, so I'm going to make that 50 cents. Spread width is 50 cents. I want to make 10 cents on this. If I can get 10 cents, then my max ROI will be calculated by taking the max risk, which is the width of the spread minus the credit. So the max risk in this trade is 40. The width of the spread 50, the credit I want to get is 10, and then I divide my credit by my max risk. And if I'm able to get 10 cents on this trade, that gives me a 25% potential return on investment. I'm going to say I want to risk $500, and that would tell me I need 12 contracts. And then my max risk on 12 contracts is 40 cents times 480. That's a lot of math, I know. And that's why I'm giving you a free guide. So, go down below and grab it. And then every week we can do these together. The guide is really, I have to say, well written because I wrote it. And it takes you through every step I'm doing here. What's a credit spread, how to calculate them, how to find your line in the sand. All of those things are well described in the guide. So go ahead and grab it. It's free. And let's go back to, so I need 12 contracts. That's why I came here. And I'm not seeing any credit currently. Let me play around here. Let's drop it to 1950. See, 1950 is giving me 7 cents of credit. That's even lower. So here's what I'm going to do. I'm going to put an order in here to sell this for 10 cents. All right, so we're going to sell 12 of the BITO 20 puts. We're going to buy 12 of the BITO 1950 puts. Expiration date, 26th of January. I'm going to try to get 10 cents. And the reason I think I can get 10 cents is because the lower spread here is offering me 7 cents. So let's see if we can get it Doesn't hurt to ask, right? I'll put a line in the water. I'll go to monitor, and then I'll see what happens here. All right, that should normalize here in a few minutes. I'm going to let that sit for a moment. The other idea we could do is we could sell the 1950 underneath, which is even safer. Actually, I like this one better. I like this one better. Why? Well, we could literally drop our line in the sand to 1950 right now and get 10 cents. I'll take that. Well, it's 8 cents. Even 8 cents would be good. I'll show you how I know that. 8 cents, that's 19% credit. That's really good. So I'm going to put that order in as well. Selling 10, listen, now I got to get my number of strikes here. I need 11 strikes now. 11 strikes to contain my risk. All right, so there's 8 cents there. Let me put that one in the water as well. So either one of those two would be good, and I'll let them sit for a little bit, and I'm sure we'll get a fill on one of those later today. Bitcoin or BITO dropped a bit. Look at this. Look at the support here, Ryan. Resistance there. BITO came down, touched 23, and now appears to be poised for a bounce. So sell at 20, sell at 1950. 20 is as close as I'd want to go. Maybe 21 tomorrow. So if you don't get filled on this today, then be sure to keep going after it. 20 is solid. 1950, more solid. You could go to 21. That looks really solid as well. So any of those lines in the sand are reasonable, and take advantage of this beautiful news that we have on cryptocurrency. BITO, B-I-T-O. All right. So I'm going to let that run there. And if we get a fill, I'll certainly chime back in, Ryan. And at this point in the show, let's go ahead and see if anybody has any stocks from our community. Any stocks from the community that they want me to look at?
I'm asking the question right now in the chat.
Okay. I know Gerardo's here. Gerardo must have a trade that he's looking at. And while we're looking at this, there are other companies that you can take advantage of this run. There's a news item right here on CNBC on the kinds of companies that are really benefiting. Brokers like Coinbase and Robinhood could also be ways to trade BITO or Bitcoin. So let's look at some of these. I got to add my stock symbol here. Let's go to Mara. Mara is a Bitcoin miner. If you take a look at Mara, you can see Mara is up today. So selling at 2250 on Mara would be a good idea, a reasonably good idea. Coinbase, it's a digital currency broker. Coinbase, another way to trade this trend. Let's go after Coinbase. Binance got hit with $1 billion+ fine, one of their rivals, and Coinbase has risen like a rocket since. So I like Coinbase maybe down at 140, line in the sand at 140. Coinbase would be a good play as well. So let's go back and take a look. Ryan, you just go ahead and chime in if you see any trades.
All right, I'm seeing BA right now.
Boeing. Let's take a look at Boeing. Now, with these kind of credit spreads, you don't necessarily need to have news, but news is always a good thing. So I look at Boeing. Now, we know what's happening with Boeing, right? They had the blowout in the door, the loose bolts on the door. They almost had an air disaster. And the stock has plummeted as a result. They're being investigated by the SEC. This is the 737 MAX or 787 MAX, which one? I forgot the name. I forgot the number. But they've had problems in the past, if you remember. And this one is good. The stock is under duress. It's now below the 50-day average. All right, so that news is out. The SEC is investigating, and if there could be a fine. Now, where's the line in the sand? And my eyes go right over here. Resistance, resistance, resistance at a round number. That would be a good place, in my view, a line in the sand right here, right at 240. And that would look like selling the 240 call and then buying the higher strike call. Go out about 14 days, and that one would be a really good opportunity as well. And what I really like about it is it came down hard on the news. That was Monday on above average volume, and then it's drifting down. It's now below the 50-day average. That's this red line, and you have resistance at 230. This is key. Lines in the sand are best placed at round numbers where the stock has turning points. So let me show you this. This is one of the things you want to derive, a skill you want to build. So I know 230 is resistance because it was prior support there. It was prior resistance here. It was prior support there. So that level is solid. So for us to get in trouble on Boeing, the stock would have to breach back up above the 50-day average, the red line, above 230, and then 240. So there's two levels of protection to keep us safe. By safe, I mean that the stock should have a hard time getting back up above 240 because it's resistance, and that's a perfect place and the place to sell a credit spread. Again, that would look like selling. Actually, I'll build it for you here. So if you wanted to do the Boeing trade, this is what it would look like. Actually, let's go ahead and take a look at it live. I see my premiums drying up here. All right, let me build the Boeing trade, and then I'm going to come back and go after BITO again. I might have to change something up. Now, when we look for trades at the market open, we don't know what the pricing is going to be, and it's very volatile. So I may change my tune here and then alter the trade on BITO. So let me come back to that in a minute. So remember, again, back to Boeing. I want to sell the 240 calls. All right, that's resistance. I want to go out 15 days. There it is, 15 days. I find 240. And right now, let's see if we can get enough money. Yeah, that's a good trade right there. You would sell the 240 call, buy the 250 call, and try to get about 28, 30 cents. I'd take 25 cents on that. So let's see what that would look like. Boeing, Jan 26. You want to sell, you want to buy to open the 240, 250 call. And then sell to open the 240 call and get 25 cents for that. Okay. Now, if you take this trade, I'm not recommending that you take trades. I like people to paper trade and practice. So, make sure you know how to run this system before you risk real money. Once you're in, you want to close the position for a loss if the stock closes above the short call strike, which is 240. And then once you're in, then put an order in, GTC, to buy the spread back for 10% of what you sold it for. Let's say that's 3 cents, good till cancel. And then that will take your profits off the table and keep your hold time contained to around 7-8 days. So Ryan, that's a good looking trade as well. Thanks to whoever sent that in. I have a feeling I knew who it was. And then I'm gonna go back. I want some BITO, man. I want BITO. Let's go back to a chart. I'm gonna get me some BITO. All right, now see the stock's really taken off. So now I'm gonna have to lift my strike. I'm gonna try different strikes. I want to move up 50 cents at a time and get in as far away as possible and still give myself a shot to make 10%. Okay, so let's go take a look and see where the current prices are. I put 2 orders in. one to sell at 19.50. I wanted 8 cents, and there's only 4 cents available. I wanted to sell at 20, and I wanted 10 cents, and there's only 4 cents available. So now I'm going to cancel these orders, and I'm going to go try another strike. So let's cancel both orders here. All right, they're both canceled now. And now I'm going to go back to BITO. It's kind of a fast game. Now I'm really conscious that I'm moving fast, and it's hard to follow perhaps everything I'm doing here. But so now what I'm going to try to do is sell 20.50. I'm moving my line in the sand closer to the heat. Now that BITO is really firmly above 23, I feel good about 21.50. I would maybe go to 22, but let's see what we can get for 21.50. So that's my line in the sand. That looks really good to me as well. So 20.50 is giving me 6 cents credit. So if I get 6 cents credit on a 50-cent spread, that's 14%. That's really good. Now, the problem we have now is the credit's getting so small that commissions will eat into the credit. So here's a trick. I'm now going to drop my lower put to 19.50. All right, so that's now a $1 spread, and I can get 10 cents. Okay, that's good. I like that one because I can still get 11%, and my commissions will take maybe 2 cents off of that once you close it. So then I can net 8 cents with super high probability of profit. So that's the new trade. I want 5 contracts. That's what my spreadsheet tells me. So let me do 5 of these. And I'm going to ask for, Ryan, one of the things I don't like when I trade is if I put an order in and it fills immediately. I don't like that. It means maybe I left a cent on the table. I don't like that feeling. So I'm going to try for a little bit higher, 11 cents. And if I don't get 11 cents, then I'll just drop it back down to 10 cents. May I please have, it took the wrong price. All right, it's not giving me 10 cents just yet, but I would let that sit for a little bit today. And then if that fills, then you'll be in good shape, I believe, on BITO. Last thing I'm going to do here is give you the trade instructions on BITO. And what we're going to do is, I'm just going to copy this here. We're going to buy to open the Jan 26, 1950 puts. Oops, I got my wrong. Slow down, Mikey. 1950 puts. And then I'm going to sell to open the 2050 puts. Do that for 10 cents. And then we're going to close this trade out for a loss if the stock closes less than the short put strike of 20. And then, of course, put an order in to buy it back for a penny, and that'll net you 9 cents on this trade, which will be around 10% profit in a matter of days. And with BITO rising so aggressively, I think there's a good shot that will be a short hold time on BITO. Cryptocurrency's hot. This is one way to jump on the bandwagon. And Ryan, we've gone just over 30 minutes, which is sort of our time. So just want to encourage you to come each week. We live trade. If you want to come join me in my community, you can find out more about Michael Wade Trade Coaching by going to www.mwtradecoach.com. Ryan, that's a wrap for today, brother. We'll see you all next week. Pura vida.